Hey, yo, what's up, Outliers? Happy 2nd of July. I have a new toy that I have no idea how this thing works. Hold on, let me go to this one. Take a look at this. Just got one of these. No idea how it works, but my hope is to be able to use this during some of these live streams to make it easier to come up with timestamps, since I don't have the time to watch through a live stream and come up with timestamps. And I haven't found a AI tool that does a good job at it yet, that's like accurate and not more time consuming than me doing it myself. So we have this little nifty thing, and a lot of languages. I only speak one of them. A lot of languages. So should be fun. I'll tinker with this a little bit later. How is the first trading day of the year for everybody? Pretty solid. I did not spend a lot of time trading today, although I did put on a couple positions. I was actually cruising around this really, really cool spot that's local to us. It's called Lions, Tigers, and Bears. And it's like a massive animal sanctuary. And we actually got to hang out with two tigers. Well, a bunch more than that. But these two tigers specifically are from the Tiger King. So when Tiger King got shut down, this sanctuary ended up helping and grabbing a couple of the tigers. And I'm not gonna lie, I thought it was kind of hilarious that it's from the Tiger King, because I did watch that series on Netflix. It was pretty damn entertaining. For better, for worse, it was pretty entertaining. That dude is something. So pretty neat. Excited to see if I can figure out how to use this new thing. That's one of the fun things, actually, to be honest, about me doing YouTube and trying to be a content creator for everybody, is I enjoy trying to learn new stuff about what I'm doing and new tools, new technology. Like this thing, it doesn't seem like it's going to be too crazy, but it's all new and it's all a continual learning process, which is, I think, pretty fun. So yeah, kind of stoked on that. So that is where we are at today. Now let's get over to the main screen. We'll run through our standard market update, and then we'll pop over to like a focus topic for today. And then at the end of the stream, this was actually one of the recommendations from the recent round of feedback that I was soliciting from everybody to help me make this whole thing better, is I'm actually going to start including a trading tip of the day. So the very first trading tip of the day will be at the end of the stream. So you'll have something, specific to walk away with, hopefully that's useful. They're not going to be like huge things, because I have to come up with one of them for every single one, but I hope it will be generally useful to you. So let's see who we got. It looks like we got Tommy, Compelled Cat, Andrew, James, and we got Why Not. Great to see everybody. Cool. Let me grab this chat, pop it up out the way so that I can keep an eyeball on you guys here. And let's dig through the market. I did, by the way, grab some more Lunar finally. So I wanted to get it obviously on this downtick, but wasn't in a spot to do so. So I grabbed it today, and we need to set an updated alert here to run that below. All right, now, oh, interesting. The market's up quite a lot, a little more than I would have expected. So let's take a stroll and see. S&P 500 down day, well, down day across the board. IWM via Russell 2000 about flat on the down day. It's actually up just a little bit over the prior day. So even though it did have a down day, it's showing a little bit more relative strength, and that's probably because it's already been pushed down to a relative extreme, at least as it sits now. VIX did pop just a little bit, but it's still pretty light. Bonds sideways, Bitcoin slight uptick, generally sideways. Then we have, oh, interesting. These guys hit a new low today. XLB hit a new low today. That's actually kind of interesting. XLB. Yeah, so materials is, this is breaking out to the downside, like pretty massively, right? So it was consolidating here, broke down to the downside, and it's accelerating. So this is still, it's seemingly early stages of the fade. It's running into this point of control here, which is pretty light. And then on a shorter term time frame, there just ain't much. That's interesting. Pretty significant weakness in materials, builders, kind of call it whichever you feel like, but a little weaker than I would have expected. Comm services about flat. Energy gap up, smaller up move. Financial sideways, industrial sideways, starting to break out to the downside as well. And then technology starting to break out to the downside as well. That's actually not great. This is not great. Staples, new 3-month low, real estate sideways, utility. Yeah. So this is very similar to what we've talked about quite a few times now. And in a broad nutshell, it still looks like the market is in a rotation component. We have some things that are starting to stabilize. We do not have large representation of that so far. So really, really interesting beginning of the year price behavior. So I actually need to update one of my trackers really quick with all of the open prices for the first day of the year. So we opened at 589.39 in SPY. So 589.39. Then in IWM, we opened up at 222.93. 222.93. And then in Qs, we opened up at 514.30. 514.3. What I do is in a Google Sheet, I have a small little calculator for market performance, and I just run that. And it allows me to track how we progress over the course of a year. Like a 1721 open on VIX is actually pretty high for January, for those that don't know. It's less time specific, but January is actually a little more mellow than that, interestingly enough. Then TQs opened at 80.54. That's literally double what it opened at last year. And then UPRO opened up at 90.07. 90.07. And then diamonds, which I don't care about at all, 423.8. 423.8. And then last is TLT for the tracker, TLT. And TLT opened up pretty low here, 87.8. Over 10 points lower than last year's open. Interesting on that, huh? So if we look at TLT over a year period, I mean, it had a pretty nasty rollover from its start around 98. So if you're a holder of TLT for the year, it just did not look that great. And I don't think anybody was surprised by that. I played a couple of the moves in TLT opportunistically, but we just know that bonds right now, just not the place to be in general. Now, the other thing I wanted to look at was SSO, because I'm looking at running the coverage strangle in here, rotating a small section. I'm figuring out how I want to configure the portfolio. It's either going to be SPY and UPRO. It might be that combination. The reason why I do it that way is I can still gain the amount of leverage that I want for the total sum of money, but they're both way more liquid. So what I can do is I can trade, let's say 2/3 in SPY, 1/3, a little more than that, 1/3 in UPRO. And for that aggregate amount of money, it essentially will behave as 2 times leverage versus 3 times leverage. Now, you don't get rid of the individual risk you run in the product itself, in this case, UPro being 3 times leveraged. If there is a massive down move, like it can go insolvent. That is a thing. Now, I don't think it would be the case for something like UPro because it holds such a massive amount of assets under management, but that doesn't mean that it's impossible to happen. So that's the way that I try to balance gaining the liquidity that I want, but then also gaining the overall exposure that I want in terms of leverage for the covered strangle without stepping too far in front of the bus by going all in on UPro, all in on TQs or whatever it is. I just wrapped up the covered strangle portfolios for last year from when I started for like the last quarter or so. And I'll do an update video at some point that walks through everything for the covered strangles that I ran in TQs and UPro. And I'll still run, like I said, a portion of it, but I'm probably going to be scaling them down in favor of something that I can run a little longer term, because I prefer to gain leverage via options versus the product itself. When the leverage is built into the product itself, there's a little more costs associated. It's just not as simple or efficient because you have to maintain it via options. So that's the leverage stuff that we're looking at right now. Let's get back in here and take a look through anything else that sticks out to us specifically. Tech was definitely interesting. Utilities about flat. And then this is interesting, actually. Discretionary. Discretionary is finally starting to roll over. So the reason why that matters is discretionary had been holding things up for a while, as something like Staples was rolling over preemptively. And now we see discretionary holding the line a little bit here. And then as of the 27th of December, it's really starting to accelerate to the downside. It's had 5 consecutive down days. So that looks like general weakness to me. That's what I pick up here. Now, I am interested that from a futures perspective, that the futures are up a little bit here. That just surprises me. Also, I think I need to make sure I save this grid before I move. Update that. And then let's take a look at futures. Yeah, so E-minis are grabbing a little bit. Same with Qs. Russell. VIX is coming down just a little bit, not much. 10-year, 30-year. About flat. Bitcoin still. Crude oil's picking up just a little bit. Nat gas came down. That's the short-term move that I traded, I think, when we did the pro live stream, whenever that was. I literally put the trade on while we were on the stream together. And that was a pretty robust trade that just happened to move quite a bit, actually, interestingly enough. So looking over my portfolio and where things sit now, I'm still long overall market deltas, so it is time to start shopping. Now, I also owe you all that video about the GameStop covered strangle. The only thing that I haven't fully dialed in is the size of the trade that I'm going to use. I was originally using 10K. That was based on the poll that I did during one of the GameStop live streams, where we essentially asked, like, what's the average holding? So, and the whole point of me creating this portfolio, and that's not really a portfolio, but this allocation, is so that people can see how to trade a typical amount of money for a GameStop, which again, when I saw it was like 10K or something like that. Now, it's flexible because the way that I'm doing it is I already have a small allocation of GameStop. It's definitely quite a bit more than that, but I'm just pulling some shares essentially and tracking them separately than the shares that are just buy and hold into perpetuity. So for anybody that trades GameStop, I'm just looking to get your preference for the covered strangle strategy that I'm going to trade in GameStop. And specifically, what amount of money or what size do you prefer it to be? And it's really, it can be anything, but the goal for doing a small amount of money is for it to be more accessible and relevant to people that are holding GameStop. So see, and this is the thing, right? So like TCM King is saying 100K, which is fine, but the problem is I just don't think most people have $100,000 worth of GameStop. Do you even have $100,000 worth of GameStop? Lauren says 5K. Like, that's the thing, is based on the couple polls that I did already, it seemed like a smaller allocation. Roy Titty says full port, like a true degen. Yeah, and that's the thing, is like for people that are, what, again, I don't care what the allocation is, because I don't think anybody would have, honestly, an allocation in GameStop, at least here, other than Roy and Kitty. Roy and Kitty definitely has the trump card. But I don't think anybody in the chat would have an allocation in GameStop that's bigger than the portfolio. So, yeah. Alex says I got 3,500 in calls. Yeah, so that's more like a ratio diagonal, which is fine. BW says you will make a lot more money shorting GME than playing calls on it. That's a great way to get caught and burnt alive. Lauren says GME is more than half my portfolio. Well, when it comes to whatever allocation makes sense to you, that's okay. But that's why I'm asking for a dollar amount. Because here's the thing, is I want it to be something that people, when they look at it, they're like, oh yeah, I could do something like this if it makes sense for me. And the whole point is to show an example by doing. Very similar to what I was doing with the coverage triangle on the leveraged ETFs. Now it's boring. There's not a lot to talk about, because the way that I built the coverage triangle is a strategy for myself, is that it's not that intensive. You don't have to do that much with it. And that's literally by design. But I don't want the coverage triangle to be something that's just kind of like random and stuff that people would look at and be like, okay, yeah, that's cool or whatever. Yeah. So the idea is the same way that we train people in the military, right? It's like show by doing, not by telling. So that's what I'm trying to piece together for this. So James says 2K. Roaring Titty says 200 shares. Guy says 5,700 shares. Lauren says relatable is good. It's how I learn best. Yeah, and I think that would be the case for something like this. Definitely. Yeah. BW says I made money 20K on shorting Unity because of the dumb GameStop people who piled in easy money. I mean, that's just objectively false. You might have gotten lucky on a trade and had something go in your favor, but I don't know much about Unity, but just about anything can go in any direction for any reason. So you could have easily just gotten ripped apart to the other direction. Actually, Unity continues to go up. So I have no idea how you made 20K on this unless you top ticked it and bottom ticked it, which I just doubt from a statistical perspective. Super, super unlikely. 26. So hold on, you're in here talking about a $3 move? Oh boy. Cheers. Okay. All right. Whatever floats your boat. Now, back to actual trading. Roaring Titty says, still got my eye watching serve. Looks like make or break time. Let's take a look. You mean SCRV, yeah? SCRV. I don't think so. I don't think this is make or break at all. This looks like it's just continuing to consolidate. That's what I'm seeing here. It's been consolidating for some time now. It's still posting higher lows. So I actually feel differently about it. I feel like this looks generally okay here. I mean, it's not doing anything special, but stocks will always go through these periods of consolidation. It's super normal. Yeah. I don't think that there's anything in here that strikes me as necessarily good or bad. I think it's just a little too early to tell, but I definitely think this has time. I would give it a little more time to cook. It's definitely running on. Entity says, what I'm saying is if it breaks below a trend line, this one, not really, no. I still wouldn't say that that's a giant deal, to be completely honest with you. Here's a good example of this. NVIDIA. When you first draw the original trend line in NVIDIA, oh, of course, I just changed the tool. 1 second. If you draw the original trend line in NVIDIA off of these lows down here, right? It broke down below, popped back up, and started running sideways, right? So those kinds of trend lines, they're not dictatorial, right? So when NVIDIA popped below this longer term trend line, again, that I just showed you, this one, it didn't fall off a cliff and like disappear into nothing. It just fell down, found support, came back up, and has been consolidating since. So more importantly, for something like Serve, it doesn't strike me as like really weak in this region, right? There's a ton of support and resistance in here. So that kind of congestion generally leads to continued price activity, just because people are interested at that level. So yeah, this to me is still something I would want to monitor, right? Like, how does it behave around this trend line? But yeah, I don't think so. I think it's still okay in here. The thing I would be more interested in personally for Serve is if it starts breaking below like all of these different levels. Essentially, I'll show you. If it starts breaking below all of this, that's bad. That would be bad. That would be breaking down and running out of the consolidation phase here. So I wouldn't be surprised at all to see it continue to chop sideways for some time, because that's what it's been doing. Even on the up moves, it's been pretty light. So it's ran from 11 to 16, big move, to be clear, for something like this, but still a 5-point move, not like, insane, big move, but not insane. Then it fell from 16 down to 12, right? So if you look from low to low, it's netting about $1. That's about what it made here. Then it ran from 12.73 to 13.70, so about another $1 you got out of it here on the rallies. So when stocks are moving like this, unless there's a new catalyst or some sort of new information, it means that people are interested in accumulating it, but it's just not having parabolic one-sided moves. It's likely to continue in a general stair-step pattern like this until we see some sort of news or catalyst that might propel it a little more aggressively. But it's still definitely, I would consider here, trending up, right? It's just not massive. You're seeing nice rallies. You're seeing pretty steep pullbacks, but that's normal and stuff like this. But net, it's still trending positive. So just might be a little bit slower. It's nothing too crazy, I don't think, yet. But I agree with you, though, is that especially because volume is pretty light, it's starting to ramp up. What's the institutional ownership on Serve? Do you guys know? Let me see. Let me see if we can find out. Take a look at Serve. Institutionals 19.6, insiders 12. This is good. So that kind of stuff is actually really, really important, because it means like the whole float of the stock isn't held up, which is great. So yeah, I mean, I think it looks good. I think it's slowly making its way, but I think it looks good here. It just needs to maintain. I really think the really important levels is it needs to maintain this rally in here. If it starts falling back through this rally, then that's fair weakness, meaning not something I would be overly eager to step in front of. You can already see where I would want to see it start breaking above, and this would be the initial break above level, something like this. 1770-ish. I would want to see it break above that on volume, but it's just taking its time. And that's okay. As long as it continues to move in the correct direction, that is genuinely, ultimately, what matters here. BW says, I like SoFi. SoFi was interesting because SoFi's getting punished a little bit. Yeah, I like this. I really didn't like. But I agree with you, BW. In general, this surprises me, to be honest, to see this kind of pullback, because this is starting to be out in no man's land. Like, there's just not much here. And we can see the point of control, the next volume node is down here, and it's pretty light. So generally, I agree with you. I was actually eyeballing trying to get back into SoFi, but I just did not like this pullback here. You can already see where I had an alert resting for what I need to see it do before I become interested to the other direction again. But yeah, this surprised me a little bit. I didn't expect to see this kind of weakness in here. It seemed well positioned, because here's the thing. Again, pullback for stocks like this, they're really, really normal and part of the overall process, but it's within reason. When we start seeing pullbacks that deepen and steepen too far, that's what this is starting to do, because it's gone from a high of 17 and now it's closing down at 14. That's a little too far. So we want to see this slow down, because 20% plus pullbacks here, that's literally an internal bear market. Now, again, for something like this, it holds a slightly different weight, because you can see the average true range is 6.2%. The average for a 5-day period, for a 90-day period, it's 4.2%. But that's massive compared to its standard moves. So BW says market always overreacts. I personally don't love generalizations like that. I don't fully disagree with you, but from a trader's perspective, the market does whatever it does, whether it's underreact, overreact, properly react. The market determines the price. So whatever the market does, we can say whatever we want about it, but it doesn't matter. The market is always going to dictate the price, whether we think it's overreacted or underreacted. The only reason why I say that is because that leads to the commonality for traders when they feel like, oh, this thing is pushed down too far, or this thing's pushed down too high, or whatever the case is. And again, the reality is it doesn't matter what we think about it, right? Like, it is whatever it is, and the market is going to make a decision on it. BW says mid cap, low cap are more in panic mode. Completely agree. Completely agree. Mid cap, not so much. Mid cap is doing fine, but yeah, small cap, completely agree. Small cap is in the danger zone right now, I think. Small cap, and you can see that represented in IWM. But again, here's the problem for that theory. BW says that's why a high sell-off in SoFi. It's not. It's not from the small cap perspective. The reason why I say that is because it didn't move sympathetically today with small caps, right? IWM was down today, but modestly so. Opened at 23, closed at 21. So a small move, 1% move. This is, and it's consolidating. What SoFi is showing you is that it's doing its own thing. It's doing something different. And it was consolidating, but then essentially from here, it's been falling, and it's been contracting from the 27th on its own. IWM is not doing this right now. Small caps are not doing this right now. SoFi is doing this right now. So this is when we need to pay attention for comparing the individual stocks compared to the sector, the industries, and things like that, because it does become relative. Because I would agree with you if SoFi had a little bit of a down day and IWM was also the same. That's normal for stocks to move sympathetically with the index. But the fact that this is accelerating a little bit on its own just surprised me. BW says, I think it could recover tomorrow easily. It could do whatever it wants, whenever it wants. But again, what it could do doesn't necessarily matter a whole lot, I don't think. When we look at potentials here, it's just what it's doing right now. And I want to be clear, like, I like SoFi. I think it's a strong company. I think that they're a cool company. But there's always two parts of my brain. There's the trading part of my brain, where I'm trying to find things that I can interact with and monetize to make money. And then there's the underlying business component, which I might like or dislike. That's actually one of the reasons why I like trading Lunar, is because I just really like what they do. I think it's cool. And there's a handful of names like this that I just find the underlying business really, really interesting. Tyler Stone, thank you so much for the $5. Says, I'd love to hear your opinion on the QSI chart. If this is a penny stock, I'm not going to be happy. Okay, it's a penny stock. But, oh, what the fuck did you do to me? Shit like this is so hard to give a good answer. And it's because it is all over the damn map. The problem with stocks like this is the underlying intrinsic value of them is not agreeable at all. Meaning there's somebody that thought it was worth 61 cents back here in 19 November. And it's gone from 61 cents to 426. So the problem with this is when you have stocks like this that are so widely disagreeable in terms of what the intrinsic value, the fundamental value of the company is, you're going to see moves like this, where the 5-day average true range is 32% and the 90-day is 5%. So this is, I don't personally love it. So let's do some quick math. It has 175, 898,692, and it's trading for 426. 26 equals this times this. Yeah, it's a $750 million company. So it's small. It's a really, really small company. So so let me summarize my thoughts here, because I know that I'm processing a lot, so I sound quiet, but it's because I'm processing. But I want to make it clear as to what my position is and why it is what it is. So with this kind of company, the technical analysis, in my opinion, doesn't really matter. The reason why technical analysis in something like this doesn't really matter is because the company is so small that it's going to be whatever a small constituent of people decide it to be. So from that perspective, you can't apply standard technical analysis to it. Just like stuff that, like GameStop, that is definitely driven by like normalized market forces, supply and demand constraints and things like this. Because GameStop behaves like that, you applying standard technical analysis to GameStop also has to be done really cautiously. So like right now, I would argue you can apply standard technical analysis to GameStop. But I would also argue that when it's going through its really big, massive moves, you cannot, because it has a completely different pricing function associated with it. So when we're talking about technical analysis, I think it's important to go back to the basics on what it's doing. And technical analysis helps us understand and identify what the underlying supply and demand is for a company. And that supply and demand has to be across a broad marketplace, meaning consensus-driven pricing. So for something that's very small like this, as you can tell, there is no consensus. Now, it looks like something happened on the 20th. Maybe we could see what that was just out of curiosity. And let's see what happened with QSI. Let's start from the beginning. To partner on Proteus. I don't know what that is. Planet Innovation, and they will partner on the development and manufacturing of the quantum-sized novel proteomics. Is that how you say this word? Proteomics? Proteomics platform Proteus. Let me know if I'm saying that right. Planet Innovation has a team of over 400 people and expertise across design, development, manufacturing, scientific instrumentation, and medical devices. Interesting. This is the cool part about trading, is you get to stumble across companies like this and learn about them. But yeah, going back to Tyler says, agreed. I got in around $1 and was going to hold for long term, but the volatility is insane. And they recently just partnered to get chips from NVIDIA. Yeah. So it's like, you kind of do, I think, whatever you like and whatever fits best. But that's always going to be the name of the game with small companies like this. It's a numbers game. You could put on 50 of these small cap kinds of trades and you hope to win on 5 of them. Like, that's essentially what it boils down to. I generally avoid really low cap companies like this, specifically like this small. And it's just because standard analysis and standard rules don't really apply. And more importantly than all of that, you run out of liquidity really fast. And insider information is going to dominate the price movement of something like this. It's going to dominate. And you will never be inside. You will always be on the outside. So you're competing against pretty difficult market forces. Now, it looks like it's very bullishly positioned, which looks good. And again, there's nothing wrong with speculating on stuff if you like it. But yeah, I would just be really, really cautious with something like this. Make sure that it's sized appropriately and, you know, all that kind of stuff. Because yeah, this, just as it doubled essentially in price today, it can halve the other way. And that will always be the case for small cap stocks like this. They're always fun to look at. And the other thing I like about looking at stuff like this is this is the fun part, in my opinion, is some of these are going to be the next round of really big successful companies. It's just going to be a really small minority of them, but some of them will be, which is very, very cool. I always find that fascinating because if we go back to something like Apple's one of my favorite long-term charts to look at because it's so fascinating. If we go all the way back and we take a look at what it was back in 85 on a relative basis, it was a 10-cent stock. That's pretty cool. That's pretty damn cool that this was a penny stock essentially up until 2000. And then it started to rally up and out. And it didn't really start gaining favor until 05 or so. This is always very cool to me to look back and eyeball. So who knows for something like QSI, if this is one of those. Again, statistically, no, because from a statistical perspective, the majority of them are not going to be, but still interesting nonetheless. Tommy says, Apple really have to lock up cap and wait. Yeah, and that's the cool part, again, for like different approaches to trading and investing. Because there absolutely are people who aren't as interested in trading super short term, and they're okay actually investing for the long haul. And the process of investing is exactly what you're talking about, Tommy. It's being super patient and giving stuff enough time to approximate to, you know, whatever the ultimate value is that you think that thing is going to be. Now, the cool part about investing as well is that it generally favors the kind of economy that we have in the US, which is just expansion based. I'm getting my little pad thing set up. I'm excited to mess with this. it's an expansion style economy. So companies that survive and continue to grow, that's why investing tends to work so well. Investing would work really poorly if we were positioned differently in terms of an economic force. But the basis of what we do and what we have is that it's expansionary. And if that changes, and that's one of the big concerns with 2025, is does that continue? We already looked over an overview yesterday in GDP. Looks like it's starting to slow down. So from that perspective, that will strongly bleed over into a lot of this stuff, including things that are going through IPOs, whether or not they choose to IPO, or if they decide to even seek to go public and to try to grow from there. It just becomes more oppressive for smaller companies, at least. And this is why, from the thing yesterday, it talked about specifically pricing power, because things that do have pricing power become very, very resilient in markets like this. So for QSI, looks interesting. It looks like it has sponsorship. It looks like it's starting to run pretty hard. It looks like from an options perspective, it has massive call skew, and that's typically going to be insiders, because this is super small that most institutions, hedge funds definitely are not going to be playing in this too heavily. Even larger retail traders like me are not going to be playing in something like this too heavily because it's too small and you move the market on yourself. But seeing 80,000 calls against what, 10,000 or 18,000 puts, whatever it was, that's massive call skew. So people are betting to the upside. You can see that clear as day. And I would feel pretty confident guessing that the people that are betting there are institutional insider side of things that kind of know what's going on. That would be my guess. So the next thing we have to look at, though, is Hindenberg Research came out with a new study today. This. And I want to poke through this. So let's update this really quick to QSI, Hindenburg Research. I'm just updating the title so people can have an idea of what's going on here. James says, what's the pad thing do? That's a great question. I have to be honest, I don't really know, but I was asking ChatGPT last night in bed as I was wondering how to make these live streams more navigable for people. So what I'm doing is, my understanding is all these little buttons, you can program them to do different things. So I'm going to program, hopefully, so that if I press one of these buttons, beep, that it will open up a text file and drop a timestamp in there and leave a placeholder for a topic that I could very quickly type in myself during the stream, so that for anybody that wants to go back and watch prior live streams, it would be much easier to navigate. Because I would love nothing more than to have super accurate timestamps for people, because I personally find them very valuable in YouTube. I just recently, this is hilarious, I just recently got YouTube Premium. I didn't have it for the longest time, which is weird because, you know, I definitely use YouTube a lot and it's very reasonable for me to, but it's funny to me how the brain determines certain things that are just expensive or cheap. And even if you have the means to afford it, it's still primed that way in your brain. But the process of making timestamps just for me is really arduous, because I'm a single person to go back through and, you know, scroll through a whole live stream to then insert timestamps. It's just super inefficient. It's just not worth my time at all. So it's the kind of thing that I would like to hire out. But the problem is when I try to hire stuff like that out at what I would consider to be a reasonable rate, you just get a fucking terrible output. It's just not good. So then that ends up taking the same amount of time to go back through and unfuck everything. And there hasn't been a good AI solution yet that's accurate. Fortunately, I've tried a bunch of them. So I'm really hopeful that sooner or later that will be a thing. But until then, we have this little black box that hopefully I can just press a button. It'll open up that thing, drop a timestamp in there automatically. I can type in, hopefully super fast, whatever the topic was. And then it will be generally, I hope, easy to implement, copy and paste into the YouTube video description so that you have the timestamps and you guys can find things more easily. This is also specifically in mind for the pro members, because for the pro live streams, we cover a lot of like very niche topics. And it would be, I think, really efficient because a lot of folks from the pro side, they'll watch the recordings because a lot of them can't make the streams. So yeah, we'll see. We'll see how it goes. There's also a chance that I might set this up so that when I press a button, my computer blows up or some shit like that, which would be generally unfortunate, but I wouldn't put it past myself for that to be potential, because it is a potential. James says, could you do it in Google Sheets and have a cell for time now and then a quick blurb? Yeah, so I think you can program it to essentially a hotkey to anything. I'm just going to use a text file like the notepad, but you can set it up. I'm going to try to set it up so that it automatically does it in the correct format. Royntity says, do you use Final Cut Pro? I don't use shit. I normally just click the button, put my ugly face somewhere on the screen, and then start rumbling my fat face about stock market stuff. I don't use shit. So if I can't do it in people call it post and it sounds really refined and stuff. I don't know if you can call it pre, but I do zero post anything. Now I did just hire a new editor. So I'm gonna try to work with this new editor a bit and see how it goes. Actually, the first edited video, I would love your guys' feedback on. I think it comes out the 5th. So this Sunday, be on the lookout, Bolo. Be on the lookout for an edited video. The problem with video editors is they're really primed to do things in a way that I understand from their perspective that it works and it makes sense and they like it. But from my perspective, I don't. Like, that's just the reality. And the reason for that is because they will, most of them make stuff for like super short-term attention span people. So the folks that have really, really short attention spans and I don't know, like I find that to be more disruptive and distracting than something useful. So I have to like dial all that back a lot. But then there's also the part of me that understands that in order to continue growing the channel, and if I have any chance whatsoever at hitting my 40K target for the end of this year, that's super, super aggressive for at least the way my channel grows. I'm going to have to do shit differently and continue to experiment with new stuff. So we'll see how it goes. Rentity says, do it old school. Burn a hole in the top corner of the screen or throw up a gang sign they can skim and see so they know where the timestamp is. Yeah, well, that's it, right? It's faster for me to click the button than to throw up a gang sign and then to make sure that they do it right. It's literally quicker for me. Sooner or later, my hope is to hire like a full-time assistant once the brand and the platform and all that stuff grows enough to help with a lot of this stuff so that I can focus more on hopefully the things that are more meaningful to you guys. But we are not there yet. We still need to grow, specifically the Patreon, a lot, because the Patreon is really what supports all of this. The YouTube ad revenue and stuff is negligible. I don't even have ads turned on for this. So YouTube ad revenue doesn't really help me much at all. So Harvey says, how did Tim Sykes and his student make their millions then? Compared to what? Because, yeah, I'm not sure I actually have no idea what that's in reference to. All right, let's go through this. Carvana is a $44 billion online car dealer founded in 2012. Despite facing bankruptcy risk in 22-23, stock spiked 284. Our research, including extensive document review and 49 interviews with industry experts, show Carvana's turnaround is a mirage. So let's take a look at Carvana and see how it did today. A lot of times I will fade stuff when this kind of research drops. Yep, that's why. Because it almost always does this. Almost always does this. Oh, we need this. It uncovered an $800 million in loan sale to a suspected undisclosed related party, all while insiders cash out billions in stock. Even before considering the findings of our investigation, Carvana is exorbitantly valued, trading at 80 845. Yeah, that's the area code that I'm from in New York. 845, a higher sales multiple relative to online car peers, CarMax and AutoNation, and 754% premium on forward earnings basis. The company has 4.8 billion in net debt and is junk rated by ratings agencies. Interesting. Really interesting. Used vehicle prices declined 20% past 3 years. Sold 3.6 billion in stock. After he stopped selling, the stock plunged 99%. 03, same trend. With Carvana shares up to 42 times, father Ernest Garcia sold another 1.4 billion. As insiders unload stock, the company's solvency risks remain. Almost 26% of gross profit consisted of sales of consumer auto loans to third parties, largely in the risky subprime and deep subprime space. Seeking to diversify outside its relationship with Ally. Jesus. I don't have an opinion here. I don't really have an opinion here. I want to know what like their so what is first. This. We think Garcia's will leave shareholders with nothing. At any point, Carvana's first incredible run, they could have de-risked the balance sheet by raising significant capital at its then lofty valuations. Instead, they hyped their prospects and raised modest capital, while Garcia II sold 3.6 billion. As the numbers tanked, they seemingly pulled accounting levers to make them even worse. Interesting. I'm actually very curious how effective their research is. I wonder if we can go back like pretty far. Go back here. Let's go here. And I'm actually going to move this out of the way so I can just flip through some charts real quick and see. OPKO. Gone. Or OPK, my bad. And this is from 2018, which is in here. So plummeted from there. Riot is from 2018. Same. Chicken Soup for the Soul, CSSE. They're gone. Mara. This is from 18. They're dead wrong on Mara. So that's what? One right, three. No, one wrong, three right. 1 and 3. Somebody keep track for me. 1 and 3 so far. CRIUF from 2018. Yeah, so they went away. I don't know why though. It looks like they got bought out or something. Because in 2018 they were actually doing okay. I don't know what happened with that. EGLC. This is also 17 in here, so that's another right one. Was that 4 and 1? LTS. This one is from 18 September. So in here. This also looks wrong. It looks like they got bought. So 4 and 2. AMEH. Don't know what happened with them. EMPX. From 18. Cracked. Another spot on. They're super accurate. IMPX. From what I've seen so far. Yeah. Super accurate. APHQF. APHQF. I'm going to see if ChatGPT can summarize a list of tickers for me. Because, I mean, that's super accurate. Rowan Titty says they put out stock articles, then the stocks tank. I don't really think that's the case. They definitely do tank after they put the articles out, but some of them that we looked at already, the stock was already declining before the article goes out. But I agree with you, it unequivocally adds fuel to the fire. I mean, I told you about today that I specifically will fade the moves on the day that these come out. It's like a really easy trade. All right, so I'm going to have GPT. Let's run create a list. No, I want not 4. Fuck. I wanted to use 01. Okay. Create a list of tickers that Hindenberg Research has reported on from their website. I'm waiting for these to be able to like actually web crawl. That would be sick. Okay. Let's see what GPT comes up with. Okay. So this is giving me page 7. So it looks like I have to go page by page. Let's try it again. Add this page. Oh, they have blocked. That's interesting. SQ. Add this page. I'm just going to have it compile it all for us so that we can do a little bit of an analysis on Hindenburg. Add this page. There's only 11 pages. We're already on 4. Add this. Update the list to include all pages so far. Then add this one. So what I'm doing is I'm having it collate all for us so that I can dump it in a Google Sheet. And then we will take a look together. This. And this. Is this 6, 7? We already have 8. This would be 9. This and then one more. Add this. NKLA was trash. Roaring Titty says the firm often takes a short position in the companies it targets, which has led to accusations of engaging in short and distort campaigns. This involves spreading false or misleading information to drive down a company's stock price, then profiting from the decline. The problem with that perspective, in my opinion, is that we know they're short. So if they weren't disclosing positions, I would agree with you. But because they are disclosing their positions, to me, it's just a company, at least from what I'm seeing so far, that is finding stuff that's not looking good, taking a short position to trade it to the downside, and then subsequently trading it to the downside because it doesn't look good. Which, I mean, I don't think that there's anything inherently wrong with that, provided they're disclosing their positions. Now, if they weren't disclosing their positions, then I do think that that's no bono. Like that would be lame. That would be bad. But I don't think that's the case. I think we're going to do Italian tonight. What do you guys think? Roasted salmon? That sounds good. A little bit of roasted salmon. All right, so it looks like this should be consolidated by here. Yeah, okay. So then I'm going to have it create a numbered list of each ticker. And then I'm just going to lift and shift the ticker. Cool. Add the date it reported on the stock and the stock price close of the day of the report. See if I can do it. And then we'll grab our workbook. And then this will be our focus topic for today, since we're already pretty deep into it. Exploring Hindenberg research. Today is 2 Jan. YouTube. All right. So let's see how accurate this is. It has TIO. And it reported on TIO 2023. Oh, we need not that. We need like 5-year daily. Oh, now we need to go back. This doesn't look right. What the fuck's going on here? Let me try IEP. So they reported on 2 May 23. Here's 23. Here's May. Here's 2 May. This says the closing price was 50.06. Yeah, okay, so it's not adjusted, so we'll have to do the closing prices. That's okay. There's only 34 tickers, so it won't take that long. So this is the kind of thing that I normally would just run through Python, because I don't know if I have all of these stocks though. Some of these are weird. So let's go back. We'll just do like adage. This will be Hindenberg research accuracy. And then let's dump all these. All right. So this will just be this. This will be, I'm going to actually have it reformatted. Reformat as a table. Google Sheets. Call A is the ticker. B is company name. Call C is date reported. Oh, where'd my thing go? All right. So I was about to reformat all this, but then I realized that we have AI at our disposal. So I'm literally just going to have AI do it for us. So I'm having it reformat the list as a table. Reformat the list as a table. Okay, so it looks like it's trying to download it. I don't want it as a CSV. All right, let's try one more time. I'm just trying to get it to populate the list in here so that we can easily pull it over, be a little faster. If it actually does it, be a little faster if it. Let's see. Rentity says the firm has been involved in several SEC fraud charges, indicating their investigations have also led to significant regulatory actions. Yeah, that makes sense. This doesn't look like it's formatted correctly. Not as code as a table. Jesus. Never mind. Turn it into a C with the call. Dan says Candy Technologies is a good example of Hindenburg being wrong. Yeah, well, like we were just kind of eyeballing it quickly. There were a handful that they clearly got it wrong, but just because they get it wrong doesn't really mean anything, right? Because everybody's going to have instances that are wrong. So what we're doing now is actually going to see how frequently it's wrong. So this will be ticker, and then this will be date. So here, we just need what, right? 1, 2, 3, 4, 5, 6. Oh, they're going to be different. Faster 3, you may 3. These 11 off. Seven, 20, 10. 16, 8, 19, 15. This just says 20, 18, 19. Now we need, and I need to finish ordering our dinner. All right. I added the $5 from before as their tip. I always give them like a standard tip, but then give them a little. All right. And then this will be today price. Now, some of these won't have a price today. And then ticker, we need what? Left 4? Are there any 5? This one will kill. Delete. B. And we want 4. I'm just going to have it GPT. Update the list to be ticker on save the order. This is like typically I would just use formulas to, I would just use formulas to get rid of the excess stuff. But we can just use GPT. Something is misordered though. EUR. Oh, because I deleted that row. Cool. All right, so now the reason why I did that is now this looks like not a ticker, so I'm going to get rid of this one as well. And now I can do equals. We need the Google Sheet formula. I'm not used to Google Sheets though. All right, so this equals Google Finance, and we want it of this ticker. And I think it automatically price. Okay. And then for the NAs, we'll go through and figure out what happened. Let's do for price of stock at a specific date. Imagine it can do this. Yep. So let's have this do the formula for us. So in F2, write a Google Sheet formula in D2. In D2, In D2, write a Google Sheet formula to obtain the price of the ticker in B2. Let's do the closing. No, let's do the opening price. The opening in B2 on the date in B2. And then there's a handful that we'll have to try to figure out what the specific date were, but there's not. All right. Let's see if any of these work. Okay, good deal. And then we'll do like a variance. So then will be equals the day minus original divided by original as percent. And then let's add a couple here. And then this is where I like to do some summary statistics. So we'll do count of pos return, neg return, average pos return, average neg. And then let's do median, median, here, average, median. All right, so now the next step we need to do is to run through and see if we can identify some of these NAs. So is TO not a thing? It is a thing. So for TO, we need to see if TO was bought out and if so, at what price. Let's do this. Was TO stock bought out? So it was delisted. Okay, so then for that, we would just track the last price that we traded. So TO on 6 June 23. When was TO? Uh, 6 June. This looks like it, huh? So the open, so we'll do the close on the day before. 255. And then it was last traded at 69 cents giggity. Okay. And then I'm actually going to update this formula so that it does one day before. So update this formula so it uses the close from one day earlier from the input cell. So this is just to capture the move from before. All right. So now we go on to ride. I'm going to maybe try trading view. Might be a little bit better. Ride art. Okay. So ride is this 12 March of 21. March. I said 12 March? Wait, why is it given to me as weekly? I don't want weekly. Wait, what the fuck is happening right now? I'm so confused. Only. All right, I'm going to exclude this one. The reason why I'm filtering these is I don't want to get rid of them from the data set, but like some of them are just weird. So I also don't want it to create a problem from the data set. So this, let's get rid of ride. And then I'm also going to sort these alphabetically. Be a little easier. ALDS. Okay. So ALDS was done in 2018. I would have to guess here. Yeah, this is set up to do like weekly or something. So let's just use the close from here, which was 2 pennies. And then the last price we see was 1.23. Okay. Next we have Burr. And that was 2019. We'll probably be able to see when it came out here. The close, 1368. And then the last price traded, 1289. Okay. Next arrows. That was 5 June 19. This looks like June 19. Okay. So this will be the last close before 80.94.261. 80.94.261. And then the last price we see is 13.713. 13.713.091. Venus. 5 June 20. If it would have been a close here. 3.615.919. 3.615.919. And then the last price traded here. Close 31.769. 31. 7, 6, 9, 14. Six, 4. Next, HFF. This was 23 March 20. Here, 23. Closed the day before, 12:32. Huge. HUG. I don't see anything here, so we'll get rid of huge. HYLN. This was 20. Oh, that one's already all good. Dex. This was 25 June 20. Close on 24. 6, 5, 8. 6, 5, 8, 2. And then today, .1290. Job. Sometime in 19. Eyeball it. Maybe not. It is not clear to me. Let's see. Hindenberg research job. Is it? Trying to see when it reported this. I don't really see. So I'm just going to pick something in 19. We'll pick like the midpoint somewhere around here. Call it like 112. Next, we have KNDI. Alex says, I'm just sitting in the back, hoping I'll learn something. Well, hopefully so far you're already learning something. What you guys should be learning is how at least I'm approaching analyzing a broad set of research by a company. And I'm specifically trying to answer the question of how accurate is Hindenburg, because people will have all different kinds of assumptions like, oh, they're always right, or oh, they're never right. Like that's what normal people will say. What abnormal people like me will do is actually figure out how fucking accurate they are. And I will go through and see so that I know the actual answer, because then it becomes a tradable event. If we go through this and 90% of the time that they're correct in, I'm going to look at whatever the average time frame is from the report until today, then we short Carvana. Like that's what that means. And still probably will short Carvana anyways, because I think that it's likely to continue down in the short term from this anyways. Okay, so back to this. Closed here, 932. 932. Riot from 2018. Trying to see if anything sticks out to me for ride is like maybe this gap. Let's call it here. So the close on 15 Feb, 1720, 17.2. And then we used 15 Feb, 18. Next is SCYX. And they were also 19. Maybe here. Let's do 9Ds. 958. 9Ds. 958. The specific date really doesn't matter that much. That's why I'm not trying to be super accurate, because most of these are over long enough periods that you could pick any time during the month realistically and get most of the result. So it doesn't actually matter. Why Not says, would love a further deep dive into AI tools. Did you see the video I did about using AI? Here's a video on how to use AI as a trader. This is using AI just for like research. 13 April 20. Here's 20. So the close on the 12th, 36.28. 36.28. Next, last two, WTRH. Nothing for that. And then YR. So we'll get rid of WTRH from our sample. And then YIRV was from 60. 18. Close was 1179. Did they actually go fully bankrupt? Yep, they did. I'm gone. Okay. So now we have some data to look at. So now we'll do average. This. Is it because the negative numbers? Right. Maybe I need to get rid of. Let's clear these out. Ride. This. So I think it was still picking up the. Okay. Let's do if I think I'm just gonna do count ifs. Let's have ChatGPT do this. So we'll do tell 3 formula to average the number by 30. Is there Where's the 0? Oh, got this. Oh, that's why I wanted to do count. No. Each number I 2 30 in cell B3 if oh, that's super easy. Is there an extra parenthesis? Ah. Yo, what the f is so difficult? Trying to see the way that Google would or ChatGPT would do it, but it just made it so much more difficult. I mean, they have a really good hit rate, 75% for this. This I don't care about. So we want to average this if it is greater than 0. And then we need to do median if there's no median f. If see what this would tell us to do. In B9, the median of I2 30 if the number are greater than 0. Let's see what this. That's definitely not. That doesn't really. I don't really care about any of these. So then the other thing I need to do is duration equals. Let's do today minus. And this we just. And this one we'll just do 1 June or something. And then this will do the same thing, like 1 June. I'm just picking like a default. But most of these are pretty long term. So the average duration for these 1644 days. So a really long time. About 6 trading years, 6.5. So what do we know? After running through all of that, we now know that Hindenberg is pretty damn accurate. We know that of the observable tickers that we could find data for pretty easily, that 22 of the time they have a negative return, and 22 count and 7 count had a positive return. So it's 75% hit rate over a longer term duration. They also have a pretty high, like if we were to do a distribution of negative moves compared to positive moves as a count, it would really lean heavily to the negative moves, meaning the severity, which is really interesting because the stock can only lose up to 100%. So we would have to normalize it. So very, very interesting. This goes now back to where we are today with Carvana. And this clearly looks like Carvana is in fucking trouble. That's what this looks like to me. So then let's sort by near term to longer term. And let's just see how accurate they've been. Let's do it since like 21. 1, 2, 3, 4, 5. 5 correct, 2 incorrect. Crazy. Entity says they cause the moves, market manipulation, short and distorting, seller boxing. I don't agree with you. The reason why I don't agree with you is because if it was just them reporting bad information, the market wouldn't go along with it, because I, as a trader, stand literally to make more money by squeezing Hindenburg research if they are wrong. So the market is literally incentivized to buck what they're putting out if it's not accurate. So I think from a market consensus standpoint, if Hindenburg put research out that I thought was superficial, didn't really mean anything, nothing behind it, and they're just trying to force the price down, and I know that to be their MO, I would buy. Because then I know as more buyers step in, it will literally squeeze them. And that would be in and of itself enough to make some money. I would retort that it looks like they do a good job of identifying companies that are failing, that are not doing well. And I mean, that's what this would lead me to believe. But as we know, there definitely are bad actors in the market, but it's just the market would be incentivized to run the other way if they were running that way. Lauren says, it seems like manipulation to an extent. Many people will play just to make money. It's the name of the game. Again, I think the problem I have with it is like the size of the moves. If there was a lot of this here, where we're seeing a company down 5%, 3%, 2%, I would agree with you. But the fact that the majority of these companies, as I can see that when they are negative, they're down over 50%, like that shows a company that's not doing well. Like that's just what that is. It's very difficult for a company to, especially to be pushed down into bankruptcy or down greater than 50% without fundamental underlying issues present. Because again, that's the cool part about markets being consensus driven. If people thought Hindenburg was just coming out with superficial hit pieces, that they would, fade a company to try to put out this news piece to then play on the downtick, whatever, how big the downtick is, why would anybody else participate? You're literally disincentivized from doing so. So Lauren saying the company isn't doing well and they push them off the cliff, I fully agree with that. I completely agree with that. And I genuinely don't think there's anything wrong with that. I think it's okay. Again, as long as they're disclosing their positions, because again, here's the deal. If Hindenberg is known to have a short position on the tickers that they're putting out research, then one, they're putting their money where their mouth is. Two, we understand they're baked in incentive already. So if the market doesn't agree with their perspective, which clearly it doesn't always agree with their perspective, Genius is one of them that sticks out to me. BE is another one that sticks out to me. TGLS is another one that sticks out to me. So we can, like, the market doesn't perpetually agree with them, but it does look like they're pretty good at identifying failing companies and shorting them, and also putting out research that absolutely does help their cause if it's accurate and if people think the research is good. If people don't think the research is good, then there's no reason to pile on, because we don't agree with the research or the conclusion. But that's not what it looks like here. Super interesting. All right, gang, time for me to sign off. I'm about to make a video about the GameStop covered strangle. So we will take a look at how we're setting that up. Tomorrow's live stream, we'll still do the options trading basics. I just don't know what time just yet, because we might be going out either up to the mountains or to the desert for a day just to go hang out. So TBD on when, but there will be something. As always, if you guys need anything, let me know. Be an outlier. I'll see you later.